And good evening. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 and the S&P 500. I'm going to start with the NDX, which is the NASDAQ cash market. And I'm starting here on our weekly chart. But the first thing I really want to discuss is something that continues to swirl around, and there's a lot of discussion about it. And that is that I want to talk about the Zweig Breadth Thrust that we saw twice this year. The first time we saw it was in March, right in here, during this incredible thrust higher. Now, it was within the third wave, and it was in the third of the third wave, so that all fit in terms of the structure and just what that market breadth did, that surge in the advanced decline. Then we finished wave 3, we came down. Now, this is the alternate count, but this is kind of the one I'm hanging on to right at the moment. So even though I still believe that we possibly could be finishing up a primary B wave, which will lead to a C wave decline, here's how I want to put this all together. Because first I want to talk about what the meaning behind when we see these Zweig breadth thrusts, if I'm saying that properly. But the gentleman that came up with the theory and this indicator was Zweig, is how his last name is spelled. Now, so when we saw one in late March, and then we saw another, and basically almost two, but one was really big in November, which is really like a week and a half ago. And what that normally suggests is that in less than 12 months, so basically it's like between 6 and 12 months, the markets will be higher than where they are, higher. And that actually, so let me just put this in context. The 17 prior times that this indicator was triggered, stocks were higher 6 and 12 months later, and that was 100% of the time. So the average 6-month forward returns are about 15%. Average 12-month forward returns, more than 23%. Now, we get those huge market moves. And what did we see? Everybody coming back in. Everybody starting to come back in. And the narrative at the time, of course, was that the Fed done hiking. That what they've done so far is going to work out and everything's going to be fine, et cetera, et cetera, et cetera. So now we're trying to attempt to put together what this thrust breadth indicator is basically telling us. And if it's really putting it together that between June and November of next year, well, let's even say from May to November of next year, we would expect the market to be substantially higher than where it is right now. And how do I want to count that? How do I want to look at this thing? Well, I will say that I am reviewing my very large long-term count, the labeling. And I do have one that I'm not quite ready to step forward and say, okay, this is the alternate, or this is what the market is actually doing. And partially because we seem to have stalled out. Now, I'm not doubting what the numbers and history has already shown us, that when this particular indicator gets triggered, that out of the last 17 prior times it's happened, the market has been higher 100% of the time. So we have no reason to believe that this won't occur again. But what can happen in between this time? And so I'm just going to toss something out, and I could be totally way off base, but just go with me. I have been actually using a count that suggests that we're going to come down in a primary C wave. And it's likely we're going to come down pretty hard, pretty quick. So what happens if something triggers? Now, I'm just going to refresh our memory. We're going to go back to 2020. And in February of 2020, here we were climbing. The market just doing great. And suddenly we get a pandemic and something really severe. We were all there. We all lived it. And the market reacted and dropped, major drop. And this is a weekly chart. So we say that we started to drop a little bit on the week of February the 17th. Then we have 1, 2, 3, 4, within 5 weeks from a high at 97.36 to a low at 67.71 in 5 weeks. Now, what if something that we're just not anywhere expecting, like I don't think when anybody was actually expecting in a pandemic to totally shut down the global economies and force everyone to stay home? Unless somebody had a really magic crystal ball, right? So is there something possible that could just totally wipe out and freak the world? You know what I mean? Freak out the world, just kind of go, oh my Lord, what is that? And the market turns and does an immediate, quick 4-week, 2-week, 5-week drop, puts in that C wave. Look what happens after that C wave, folks. The Fed started to lower rates even more, started to pump stimulus into the economy. So we can't really forecast to say like, well, this would be the reaction or this is going to happen. But if I'm looking for this pattern to actually play out, remember what I've said, that we're going to get a primary C wave and then a complete and cycle degree A wave. What comes after that? A cycle degree B wave, and that's a counter trend rally. And how have I been talking about it? I've been talking about it like a kick butt rally. And no matter where we end up here in the NASDAQ, if we end up putting in a quick low below 10,000, what is that? This is basis the cash market, 10,440, that it doesn't turn, and we do that really quick, and then we kick off in this kick butt rally. That kick butt rally is going to have the potential to take the NDX to new all-time highs. There is a structure that could build, and it would produce an irregular B wave, which, by the way, we may still see now. But we're looking to say, okay, 6 to 12 months from now, since these thrust indicators have been triggered again, 6 to 12 months from now, the market will be between 15 and 24% higher than where it is. So again, what if we were to drop that quick down, finish it? We're in a cycle degree B wave. It's a big wave. And we still manage to do exactly what that indicator suggests. Once it's triggered, what's the outcome? I'm just putting it out there because I continue to look at the market and I'm like, okay, we've had these 2 great thrusts via that indicator. So we have a very, not just one, but we've got 2 now, suggesting that the stock market or the equity markets will be higher, between 15 and 23 or 24% higher in a year. That's pretty steady and a very dependable indicator. So if I were to turn it around and decide, okay, what I'm going to try to do is present, okay, let's present that bullish count that would include that. Well, I do have one that would suggest that we could go that high. But right now I'm like, it really kind of changes all of this. And I'll just give you a hint. it would suggest that this primary wave 3 is up here, and this, and this are removed. Primary 3 up here, primary 4 over here, and that we are in a primary 5th wave up. Now, if that is the case, we are definitely, most absolutely 100% definitely going to be higher than where we are today. Now, when I look at the market, I'm like, okay, if I leave as is and I get that cycle wave A, and maybe it just brings it down to here. Quick. Do we have anything that might be able to do that? Were we looking for a pandemic? That hit so hard, so fast. Everybody spun. Everybody spun. Do we have anything else going on? Doesn't necessarily have to be anything to do with the economy, right? That part we seem to feel we have it figured out, right? Interest rates are going to start to come down. The Fed's going to start to relax. Inflation cools off. Well, then we have deflation, but that's a whole nother story. So what else could really do it? It has to be on the geopolitical front. Has to be on the geopolitical front. Or within our own political front here in the United States. Are there possibilities there that could take this market, nosedive it, and then we get that massive rally, which fulfills the double breadth thrust indicator trigger? Just saying. So, like I said, I've not actually redone and presented as an alternate account. So I'm actually going to stick with what I have right now, which does still project higher levels. So here on the weekly, still I'm using that as a primary A, B. We're in the intermediate C wave up. I've readjusted to conclude that that drop that we had off of the July high was a minor wave 4 in the NASDAQ and also in the S&P, a minor wave 4. And I continue to kind of look at this as like a triangle pattern. I am telling you because that's how I feel. But it fits for a wave 4 and it's okay. Now, because I'll tell you what, wave 3 is not the shortest wave. They're A, B, C, D, E. And they're 3s all the way down. 3, 3, 3, 3, 3, all the way down. Doesn't make the perfect little one, but it does fit. So, minor wave 4. And thus far, and I'm going to bring this down real quick, and let's go to the 4-hour chart. And thus far, we've done minute 1 and minute 2 of minor wave 5, and we're still sitting within that minute 3rd wave. It's not done yet. And I'm really looking for it to possibly get up this high. But we're stalling out around 15,850 to 25 to 50, all in that level. So I need something that's going to like light a fire under the market. And I'm wondering, like, what could possibly even do that? Because if it fails from here, we can get down there real quick. Something happened. We can get down there real quick and then re-engage. But right now, going day to day. So here's what else I kind of want to change in how I start to, what I present. I really want to keep it on a much shorter leash so that we can see, and actually it's going to be more for, number 1, day traders, but number 2, swing traders. And maybe you're a daily swing trader, or maybe you're a couple of days swing trader, or maybe you're a weekly swing trader, because I think that we're going to start to put on positions for the ultra long term. It is totally uncertain. If you want to go with the breadth indicator that had tremendous advanced decline readings that we had, both in March and in November, not once in November, but twice, then you're looking to put your money into different areas that are going to take advantage of what's going on moving forward. I do not make recommendations, but that would, if you're putting it in for the very long term, then you're putting it in on the basis that 100% of the time when this particular analyst's indicator has been triggered in the past, and 17 times it's been triggered in the past, 100% of those times, the market has been higher by 15 to 23% between 1 year, 6 months to 1 year after. Now, since we got them in November, we're looking at next November that the market would be higher by 23%. Okay, so with this, what am I going to think that this fifth wave is going to take another year? No, I actually don't. Do I think that there are things out there that could force the market, or not force, but produce a stronger rally that we can finish this fifth wave, maybe drop? Or here's the other ticket that basically everybody has told me, nada, no way. And that is that this is still the completion point for that primary B wave, and somehow this is intermediate wave 1, and we're in an intermediate wave 2. Now, granted, we zipped above, but we have not gone above on this level. That is going to be 15,953. So actually, we're getting close. We're getting close in the cash market. In the futures market, we are not. We actually, I take that back. We did get to 16,041, I believe it was, or 49. And that high is 16,250, 251 to be exact. So we've gotten close. So if the cash gets above that, then it's this. If not, then we have to allow for that possibility. And what would happen if it did is what I've continued to talk about. The market reverses suddenly and without pause. There has to be a stimulus or a catalyst that's going to be like, oh my God, get out, we're going down. Are things out there that could drive that? Yeah, there are. But right now, is there something out there that could drive this to get it up there to finish this minor fifth wave? If that's what it is, or negate that intermediate count and push us into this count. That's why I'm leaving this one up, because I actually do think there is something out there. And the next thing that we got coming out next week for our pal NVIDIA, they report, come on, tell me when. I should bring it up. They report on the 21st, my friends. That is Tuesday. Tuesday, we will know. So I think that's one reason why everything's kind of hanging out here. Why? Well, NVIDIA is going to report and blow the doors off. And if NVIDIA blows the door off, then we're going to take AMD up, then we're going to take Apple up, and we're going to take everything will go with it. And that's true. It will. So I'm definitely, and this is basis the cash, I would like to see this third wave come in at least 100% of wave 1 at 16,268. And then really get itself up here, which is 17,633. We get up there and we start talking about a little bit different, that we're going to get above 16,720. We get up here, we're in irregular territory, or the alternate count number 2, which is what I kind of started to allude to, that this is the primary wave 4, and this is a primary fifth wave, which would suggest much higher. Now, whether that's actually going to suggest that we continue to go up for another year, I don't know. But I would say we're definitely going to be higher. So I'm not there yet. I'm still walking and trying to decide. But immediate future, I'm believing that we will go up Now, cash market, you got gap and gap. Okay, so is it going to gap again and go? Maybe. Is it going to get up so at a certain point, and then on Tuesday after the market closes, we get Nvidia and they take it to the moon, and then we gap again, and then it's like gap 1, gap 2, gap 3, exhaustion turn. Possibly. We're going to have to wait and see, of course. But that's the big thing waiting for next week. And that is Nvidia. We don't have Salesforce until the end of the month. So there's a couple of things still out there that could possibly really, bring us a little surprise. All right. So over in the NQ itself. So we see that move that can happen. Now we'll go over to the futures market. Again, marking that as wave 4. 1, 2, 3, 4, 5, minute 1 of minor 5. Minute 2 of minor 5. We're in minuet, minuet wave, minute wave 3 breaking down into minuet waves. Excuse me on my speech. So we have 1, 2, 3, 4. Is this 4? And this is like they're really trying to build a rally? Or do we still have one more little down and then just cruise? So maybe is this little 4 still in play? Very possible. Again, I always like to break it down and look at that 15-minute chart. This pretty much looks like it could be the A wave down. All right. Or is it A, B, and this is a C? You see, it gets really kind of, what is all this going on? Was this finishing the B? Did that finish the whole 4th wave? It just doesn't appear that it's done. And we started to head up, and I was like, okay, go, keep going. Nope, got stuck, came down, and ended lower on the day. So will we see a continuation? And we have additional support, so just in case, that we're looking for additional support lines. If the market's going to turn lower initially on Globex and then during our regular session, then we might still have a shot at 15,760. That's the next level down. We've already surpassed, got a little bit below 382, and that was last week, and we got down to 15,796. So we dropped below that 15,800 number, but below that we have 15,760. So from where we are, it's $110, approximately $110 down. Can the market do it? Sure. Can do it in Globex and set us up to start to rally again. And then we got all those resistance points. I'm going to take these off because the expectation is that it will finish minute wave 3, set us up for a minute 4th wave, and then we have the additional. But here in the futures market, 100% where wave 3, minute wave 3 would be equal to minute wave 1, is at 16,485. The minor 5th wave would be 1.618 of minor 1 at 16,784. Now, basis the December contract, this is where it's going to get a little cagey. The December contract, I don't have to go out to the daily. The December contract, let me go out to that weekly chart. If I send out here, that high is 16,757. Actually, it's 16,767. But when you start to go as to what it was on the December contract, and I look at it on a daily basis, this level is 3, and then up here, you can see it's like 17,000 something. Here's all your 5s. So the numbers are much higher, basis December. Now, so there's another conversation. in all honesty, there's another conversation. Okay, so if we're going to base it trading the December contract, but the all-time high is 16,767. Well, what happens on basis December? It was much higher. It was, I think, like almost 200 or 300 points higher. So it's 17,000 something. Is that what I'm going to be looking for? So is this actually going to, if it gets up here at 16,784, is that a new all-time high? In my book, yes. But in somebody else's, it might be no. So let's just look at that pure number as to where this market could go. We for sure want to get above 16,040. Let me just get this exactly what it was. 49, 16,049. So what we have 100%, this again is for the minute third at 16,485. When we're dealing with the minor wave 5, we have its 1.618 at 16,784. But let's just be serious about this. If 100% or a little bit above finishes just the minute wave 3, then we have a minute 4, which will likely bring us back down into here. And then we have a fifth wave. And I would look for the fifth wave to get above 16,784, heading up towards these levels. 17,000. Again, irregular B wave, very strong possibility. So, or even primary fifth wave up. Those are what's laying out there. We have to let this play out first. There's too many things standing in its way to getting there, regardless of what that indicator suggests, and regardless of what that 100% success rate that indicator has over the last 17 occurrences that it has been triggered. I do not doubt that. I just don't know the direct path that it's going to take. I don't know anybody really does, because there's too many things that really could interfere first, and it will still happen. As I just explained, we could come flipping down in a primary C wave, finish it, put it in cycle A, we launch higher in a cycle B. Launch, and I mean launch. Pretty much just as we did coming off of that COVID low. Things happen. That's all I want to leave out there. Now, let's go over and take a look at the S&P. Basically, same story. The first thing I want to do is go take a look at the SPX. Now we're going to go back out. We're also going to take a look. Let's start with that weekly chart. Still got it, right? Haven't changed it. But here as well, that 4 would move over here, and that 3 would move up here. I'm not convinced of it yet. It's a tough call because you have to understand what that would suggest against all odds, that we're just going to march and march and march and march and march. And technically, I'd be like, yep, sure. And then the next thing you know, something stupid happens or something weird happens or something comes up and the market goes, blip, and then blip. So I'm leaving the door open to everything. And that's why I'm pulling all this down. I will go from the October low. That was definitively a low. And so where are we within that? Well, I think we still might be in a primary B wave rally. We have intermediate A and B in, and 1, 2, 3, we've done 4. Deep as it is, as deep as it is, I'm leaving it as a 4. ABC. Even though it's like zigzag all the way down and zigzag all the way up, it can count as a clean ABC. 1, 2, 3, 4, 5. The only thing is that wave 4 does overlap wave 1, but it could be a diagonal, and therefore could be a minor intermediate wave 1. And this has not gotten itself above 46.07. 46.07. Now, we're within $80. We've seen it go up $80. Could it do it again? Absolutely. All right, so let's now dive a little bit deeper into this. This is the cash market. 1 hour chart. We're coming down. There's the 4. Minute wave 1, minute wave 2. 1, 2, 3. Right? 1, 2, 3. A, B. This one's even cleaner to show us. Well, that says 1, 2, 3, 4, 5. Possibly. Leaving the 4 there. We get a little 2, and then we go. All right, so what do we got coming up? Where does that look? Well, first of all, if we're in a minor fifth wave, where do we start to get our lines for the minor fifth wave? All the rest of them up to 2.618 have been already filled. Let's just take a look. I can put that in. There's 618, 1.618. Let's take a peek. You can see them. There's 618 gone, 100% gone, 1.618 gone. Once they're above, yes, they do act as support on the way back down, but I'm not going to leave them on the chart to push confusion and how many lines can I have. So what's left, resistance-wise, is 47.07. That on the cash market would be a new high. Basis December. Okay, so possibility is there. We're going to play it day by day. What I am thinking is that this needs to pick it up and go. We need another gap. Gap 1, and which was March. No, actually, it was November the 3rd. November the 1st, yeah. So this would have been on the 2nd. So on November the 2nd, we gapped. On November the 14th, we gapped. So we had these 2 beautiful gaps. Actually 3. We had another little one right there. Small, but yeah, it was good. It was a goodie. Gap 1, gap 2, gap 3. Okay, what goes on? I still believe we need upside. If this is a small 5, and we're going to come down and we're going to go. Let's look at the future, which actually has a little bit better range in terms of what the market is doing. So again, there's the minor 4, 1, 2, 3, 4, 5, minute 1, ABC, minute 2, 1, 2, 3. I have put the 4 in. The future is a little bit clearer, and it's likely launched in a small 5, a very small sub-minuet wave 1 of minuet wave 5. And this is a small 2. May still have a little bit, it may come back all the way down, but it cannot exceed that low, which right now is, let me get it right to it, is 4501.75. Cannot exceed that low. So I'm hoping that we kind of don't start to really fall apart, but we turn around and go up. That they love it, everything looks good, and they start to rally. Resistance 45.51. It's been sitting there, actually 52. It's been sitting there for a while. So all is good. So anyway, what we're looking at is the possibility that minute 3, let me see what I got that going. I got that in there. 100% of minute wave 1 is sitting way up here at 46.36. 100% for this little tiny minuet wave 5 comes in at 45.83. I'd like to see it bigger. I would like to see the market get up into here if it's going to complete the 3rd wave. We want to keep the rules in mind. And yes, folks, this is an impulse. So wave 3 cannot be the shortest wave. But here's the balance of what we're looking at. If minute 3 really takes a launch, then we got 48.10 sitting way up here. Otherwise, I think we can get up to 46. I'd like to see, 46.32. Get up as close as we can. Put in a 4th wave, which will likely bring us back into here. And then that's minute 4, launching that minute 5th wave and take us up into these levels. Minor wave 5 would be equal to minor wave 1 at 48.70. So we got some upside potential here in the S&P. All right, let's take a quick look at our moving averages. They basically on the daily, got the 20 heading up and the 8 heading up. The 50's gone flat, the 200's gone flat, and my 100 has disappeared. I'll go put it back up there, but I won't have to do it right now. But we have a flat 50 and a flat 200. If we can get the 20 back above the 200 and the 50, it should start to give us a boost to get our market up to where we'd like to see it. All right, that's going to be it for the equity markets. The next Elliott Wave update will be on Monday, the 20th.